Welcome to This Week in Money, the source for market opinions, brought to you by AmericanManganeseInc.com. Here is Phil Mackesy.
Dan Denning is editor of the Daily Reckoning Australia. He's online at dailyreckoning.com.au. Hey, Dan, it's good to have you back on This Week in Money.
Oh, thank you, Phil. It's always good to be here.
Dan, we do not talk much about Australia here. We should talk more. Your economy is the world's 13th largest. It's rated AAA. Now, if I want to find out more about what's going on in Australia, how can I subscribe to the Daily Reckoning Australia, and what do I get for it?
Yeah, well, it's really easy. We have a website like everybody else, so you just go to www.dailyreckoning.com.au, and you can sign up right there. And really, all we do is the same as our U.S. counterparts. We cover the markets, but with a focus on Australia. So we'll talk about China, commodities, and things like that.
Now let's talk about the Australian Stock Exchange, the Australian Securities Exchange, the ASX. It's one of the world's top 10 exchanges by market cap. We should pay more attention to what's going on here. Some familiar names, Rio Tinto and BHP, and a lot of good companies here. Like the U.S. market, Australian stock markets are on a tear, but everybody down there seems a little more defensive than normal. Just like here, miners continue to get the cold shoulder. What are you seeing down there from your vantage point with the Australian market?
Well, on a numbers basis, it's actually outperforming the S&P year to date. The main index is the All Ordinaries. That's up about 6.2%, and I think the S&P 500 is up about 5.8% so far. So I think what's going on, though, is it's different than in previous years where the miners have led the index. Right now, it's the banks. In fact, the Commonwealth Bank of Australia is one of the 10 largest banks in the world by market cap now. So there's some changes in the leadership of the index, which tells me anyway that the commodity story really isn't driving it. My own view is that it's probably capital. It's money coming in from Japan and other places.
What would you say are the main differences between what's going on in Australia and what you see happening here in North America?
Well, Australia's, for a long time, from 2003 to 2009 anyway, was a China story and a commodities story. And as those, as the credit bubble popped around the world, the Australian market fell a lot. But right now, it's kind of hard to say. I think that the anomaly is that interest rates are higher here, so it's become what they call down here a safe haven for capital, where you can buy the Australian dollar, or you can buy Australian government bonds, or you can buy Australian stocks. And everybody else in Japan, North America, and Europe is trying to devalue, but the central bank here isn't.
We got some news from the Reserve Bank of Australia this week. They basically kept their interest rates on hold. Does that surprise you?
No, not yet. I mean, I think they're looking at the local economy, trying to decide whether there's inflation. And I think like that anywhere else, the official inflation statistics are probably underreport what's going on. But right now, interest rates here are 3%, which is the same level they were at in 2009 when we had a crisis. So it's really interesting to me to see what they're going to do, but they don't want to be too stimulative and unleash another housing bubble. But it's really dependent on what foreign money is going to do, I think.
We're talking to Dan Denning from Daily Reckoning Australia here on This Week in Money. An interesting report I saw a couple of days ago. Credit Suisse saying the fair value of the ASX 200 below current levels. It's trading around 4,900. They're saying, more like 4,000 to 4,500. Do you see that kind of thing? Do you see a correction coming?
Well, I do, but I kind of always do, so I don't know if I'm the best person to ask. But, this week in the Daily Reckoning, what I tried to do is look at what would explain the rally in stocks year to date. Is it anticipation for earnings growth this year? Is it rotation out of defensive stocks into cyclical stocks and growth stocks? Or is it simply capital flows where you have people fleeing low interest rate environments and buying higher yielding stocks and bonds in Australia? And it's probably a combination of all those things.
Okay. Credit Suisse saying the Aussie economy will likely weak this year. Weak commodity prices, something you touched on earlier. And, of course, that's got to basically feed into increasing unemployment as we move forward.
Well, you'd think so. I mean, what's interesting about the mining boom is in Australia is it's created a lot of national income for the companies, the workers, the government in the form of royalties and taxes. But the unemployment rate has stayed pretty stable, even as commodity prices collapsed. So, the RBA says that there are three phases to a mining boom. The first phase is when prices go up. The second phase is when you have an investment boom. And the third phase is when you have an increase in production volumes because of the investment boom. And they say that we're in phase 3 of the resource boom. And they think that it will last for a long time. But I think that's the real question for the economy here is if the resource sector isn't driving national income, what part of the economy will? And the answer is there really isn't another strong part of the economy to take over. So I would expect a tougher environment.
It seems to be either mining or finance down there, right?
Yeah, exactly. And, to me, those are both sides of the same coin, and that's the credit coin. When credit is expanding, the financial sector expands, the profits of the financial sector expand, and then demand for resources expands as well.
Obviously, the Aussie dollar pounding a lot of operations down there. Tell me about the Gorgon gas project, this thing Chevron has put together.
Well, yeah, I think last time I was in Canada last summer, I think the Aussie dollar and the Canadian dollar were at about the same level against the U.S. dollar, and they were both above parity or nearabouts. But since then, the Aussie dollar has actually gotten stronger against the U.S. dollar, and I think the Canadian dollar's come off a little bit. But the effect for companies down here with long-term projects is that their costs have just blown out. So I think in that case it was Chevron or Shell, I can't remember, had about a $15 billion cost blowout. And that's the case now. It's very expensive to operate in Australia now for resource companies. So one of the results is you're seeing fewer projects that involve lots of capital spending and money.
Dan Denning from Daily Reckoning Australia, our guest here on This Week in Money. And just like Canada, Australia is a resource-rich country, the mining sector representing almost 20% of Australia's GDP. So when I saw this headline, Dan, it sure got my attention. Mining exploration applications plunge in Australia. And this is from Western Australia. The Department of Mines there saying the number of folks applying to prospect or explore fell by 200 in the last quarter of 2012. And they're saying most of that is from high operating costs, the things you mentioned. What is happening here, and how's that playing in Australia?
Well, it's not well reported. When you sent me that link, I didn't see it in the local media, so you often don't see the stories that challenge the boom theory. But I think in addition to the high currency, which raised costs for everybody, you have two other factors. One is that it's probably widely acknowledged now that all of the huge increases in commodity prices are a thing of the past. So if you have a low margin project, and by low margin I mean the quality of your resource or your reserves is lower or it's more expensive to extract, it doesn't make sense to proceed with that if your forecast for commodity prices is stable or lower. The third factor is there's a lot of uncertainty about the government regulation. So there's a federal election here in September. It was just announced last week. So the election will be on September 14th. And the big issues there are how are resource revenues going to be taxed. There's two taxes, a carbon tax and a mining tax that were instituted by the current government. And there's probably some uncertainty about whether those taxes will be around or if they'll be around in the same form. So when you add up the strong dollar, the forecast for lower commodity prices, and the uncertainty about the regulatory environment, it really doesn't make sense to proceed with the project right now.
Now, as an investor in Australia, let's put on our future goggles for a second and figure out where to go from here. Where do we go from here in terms of looking at opportunities in Australia?
Well, that's a good question. That's the one we try to tackle every day in the Daily Reckoning. And I think part of it is determining whether or not there's anything other than finance and mining that you can rely on as an investor, and whether it's safe to take risk in the local market. So we do that all the time, and I think, like any economy, there are always businesses that are sort of less resistant to the cyclical changes in the market, but part of it is just having a different expectation of what the stock market's going to do for you, that it's not a retirement machine, it's not a savings account, it's a way of allocating capital, and you're going to take risk when you do it. So I think investors, you can get 6% in bank interest here.
Yes.
So if you can get 6% in bank interest, it's buying stocks then is a different exercise, I think. But I think that's a cultural shift in the attitude toward the stock market always going up, because I think it probably won't go up, for the next 5 years. But we'll keep looking. That's the one thing about a resource economy like you have in Canada is that you have event-driven stories that are capable of driving share prices higher. So if you find gold, you have it. If you find oil, you have it. Then you have to figure out how to extract it. But that doesn't, what happens at the ECB or the Bank of Japan or the Fed really doesn't matter to what happens on the ground for a company that's exploring for resources.
Just the same as in Canada, right?
Yeah, I think so. And, 80% of the shares listed on the ASX are resource shares.
Yeah.
So, again, on any given day, when you look at the announcements coming out of the market, there are companies that are looking for and finding resources in different quantities and in different locations. And that's geology, and that's capital structure of a company, and that's management. And those things can drive share prices up, even if Bernanke buys a bunch of helicopters.
Dan, interesting about both markets, North America and Australia, that we seem to be both at the same point, near a market top, and investor psychology seems to be pretty much the same in both places. Does that surprise you?
I guess I'm a little surprised that the memory of what happened in 2007, 2008, 2009 seems to have been erased by low interest rates. But I think there's a sense of fatigue in investors. You can only take so much gloom and doom and so much preparation for a collapse. And, last year was the story of sovereign debt in Europe, and the thing didn't collapse. They refinanced $1.3 trillion in government bonds, and they kicked that can down the road in time. So I don't think it's a surprise to see investors say, well, fine, look, I've got to do something with my money, and I'm not going to be in cash. Dan
Denning from the Daily Reckoning Australia. You cannot talk mining Australia and not mention Australia's wealthiest person, and the 37th richest person in the world, Gina Rinehart. You no doubt have probably heard of Gina, right, Dan?
Yeah, of course.
Sydney Morning Herald today saying her life story coming to a screen near you in a 6-hour miniseries. Isn't that going to be fun?
I don't know what that means. I think there's usually some nebulous relationship between the culture and what's actually going on in the stock market. So if they're making a movie about a mining magnate, it probably means there's a top in the iron ore market. But her story is interesting. She's the daughter of Lang Hancock, they called him the Flying Prospector, and he discovered the Pilbara, which is the huge iron ore producing region, in the 1950s. And she's his sole heir and has become fabulously rich based on that. But, I don't know. They're making movies about mining magnates. That can't be a good sign for the resource industry.
Now, that's one of the things I mentioned I wanted to ask you about was the iron ore price. It has kind of melted down lately. What's going on with iron ore? What's the future there?
Well, I think that's a big, I don't know what's going on. I think there's a lot that is confusing people about what's going on in China, because that's obviously the main market for Australian exports. There was a big restocking of inventories late last year and early this year, which led to a big rebound in the price from $80 to $150. So, it's been extremely volatile, but I think the X factor in iron ore prices is Chinese investment spending and fixed asset investment, and that's been variable with their leadership change over there. So I think the price reflects that uncertainty about China's ultimate steel production and its steel demand.
Dan Denning from the Daily Reckoning Australia. He is online at dailyreckoning.com.au. You want to check it out if you want to find out what's going on down under. Dan, I really appreciate the chance to pick your brain. Always good to talk to you.
Thank you, Phil. I appreciate being on, and good luck in Canada.
Coming up, Ellen Brown on This Week in Money.
Always consult your investment professional before making any investment decision. Randy Elvis Frisky and his Las Vegas show band 40th Anniversary Aloha Tour. February 23rd in Penticton. February 24th in Vernon. On sale now. Details at randyelvisfrisky.com. This Week in Money is archived online at talkdigitalnetwork.com.
Ellen Brown is an attorney and president of the Public Banking Institute. She's written 11 books, including Web of Debt, The Shocking Truth About Our Money System and How We Can Break Free. The latest edition's out. It's available in paperback, PDF, audiobook, and Kindle editions, and it's also available in German, Swedish, Spanish, Korean, and Chinese. So a lot of folks are catching on here. You can get more details at webofdebt.com. Ellen, welcome back to This Week in Money.
Thanks, Phil.
Lots of coverage on the $1 trillion coin in the last little while. Most folks not surprised given the kind of crazy financial experiments we've seen. Jon Stewart might not like the idea, but you're saying, hold on a second, what's worse here? Lending money free to private commercial banks so they can lend it out at market rates, or simply creating our own debt and interest-free money? Why do you think the $1 trillion coin's a game changer?
Well, it's actually what our money should be. We have no money supply. We have no permanent money supply. All of our money is created by banks in the form of loans. And that means, well, virtually all the money that we, the people, have access to, except for coins, which are created by the Treasury, and are today a very small portion of the circulating money supply. And then paper dollar bills we have access to. That's the only part of the Fed's money that we can touch. Like all that quantitative easing money, we can't even touch that.
Yeah.
That's a long story. That's base money. It all goes onto the reserve accounts of banks, and they just move it around among themselves, but it doesn't actually get into the real economy. So necessarily, because all our money comes in as a debt from banks, which is just sort of a shadow reflection of the base money of the Fed, it's always at interest, which means there's always more money owed back than there is money. And that means that we inevitably are in this austerity mode where we don't have enough money to pay the bills and to pay off the debt at the same time. So in order to get out of that, we need to go back to the original money system of the American colonists, and of, most governments have had this at one time or another. Certainly Canada in 1935, when they set up the Bank of Canada, actually originally it was private, but in 1938 it was made into a completely nationalized entity, and it said right in the provisions that it could issue credit directly for the productive purposes of the nation. You didn't have to go to private banks and borrow it into existence at interest.
Ellen, most of us don't realize this, but you're pointing out here that for centuries, a battle has raged over who should be creating our money supply, the government or the banks.
And the bankers have won today. They do create virtually all of the money supply. Going back to 1974, well, it's quite a long, complicated story how they won that power. But in 1971, the dollar went off the gold standard, and the dollar was dropping dramatically. And so a bunch of big bankers got together with Henry Kissinger in Sweden and discussed how they would recapture or get control of the money system again, and they decided to back it with oil. Well, it's a long story. But anyway, the Bank for International Settlements is now the central bankers' bank, in control of all these central banks. Even though they're owned by governments, they march to the tune of the BIS, which is all done behind closed doors, and we don't know what they're doing. And they set the policies, and they say that their number one goal is to maintain the stability of the money supply, which they define as not allowing any more money in there. So governments can't create their own money, and they can't borrow from their own central banks interest-free. They have to borrow on the open market, as if that meant that you were borrowing existing money, but you're not. The way banks create bank loans, they just create it on their books, and that's how the money supply expands. But it's always debt at interest, so it's always a debt where more has to be paid back than was created.
Ellen, I got to wonder about one of the main actors in the play here, the Federal Reserve. How come infinite quantitative easing is okay, but the Fed does not like the $1 trillion coin idea?
Well, that was a pretty interesting thing. The trillion. I actually first mentioned the $1 trillion coin in Web of Debt in 2007, but then it was just kind of a hypothetical thing, and then it was picked up by some economists, and it actually got as far as Paul Krugman recommended in the New York Times that the federal, or that the executive should do it, that they could play that card, and it would be sort of a trump card or a checkmate against the Republicans, who were insisting on this debt ceiling, which is also an artificially imposed piece of legislation that counters something that's in the Constitution, which is that Congress must pay its bills when due and on time. So Paul Krugman recommended that, but again, just sort of as a ruse, not as something you would maintain permanently. And then the president's press, what do we call it? Press man.
Press lackey.
No, we're not going to do it. He said, we've heard, that's been recommended. We're not going to do it because the Federal Reserve said they wouldn't take the coin. Well, so here it's legal. It's legal tender issued by the Treasury, and the Federal Reserve says we're not going to take it. So why is it that like you say, the Fed can create $3 trillion in their money, and we're forced to acknowledge that, and yet they won't acknowledge our money? I mean, it's a clear drawing of the battle lines, but but the executive just rolls over. They're happy to have that excuse
Sure.
not to do something radical. So we've all bought into their system, and that's why I write to expose that's not. We don't have to buy into that. The orthodox theory is not correct. We've been hoodwinked into all this. We've been asleep for years, and it's time we wake up to our own power and what we could have. We could have it all. We could have the abundance that we thought we had in the American colonies just by going back to the American colonial banking system.
Ellen Brown from webofdebt.com on This Week in Money. You are working on a piece right now about how Congress could fix its budget woes permanently, and it's a pretty simple solution here.
Right, just go back to Treasury-issued money instead of banker-issued money. The Federal Reserve, people think the Federal Reserve is federal. Well, and in Canada, the Bank of Canada, of course, actually is federal. But they don't act like, they're not acting in the interests of the people. They're acting in the interests of the banks. And the way the Federal Reserve Act is drafted, they have to act they don't even have the option of going out there and using their credit power to stimulate business, hire workers, et cetera, like the Treasury, like Congress could do using its own Treasury to issue the money. And so we need to go back to that original plan of the colonists. Abraham Lincoln did it during the Civil War, and that's how he managed to win the Civil War. Otherwise, he would have been in horrible debt to the Wall Street and London bankers, and he avoided that by issuing his own money. We could do that again, and we're in desperate straits again. We should do it.
Ellen, what about the folks who see any talk of trillion-dollar coins as hyperinflationary? We hear comparisons with places like Weimar Germany or Zimbabwe. What's different here?
All of the hyperinflations of history have involved paying off a debt in a foreign currency over which you have no control, usually a war debt. So that's what the Weimar inflation was about. Germany was imposed with debts they couldn't possibly repay. It was all the war damage or all the war debts of all the Allied forces, which was way more money than Germany had. So they had no alternative except to try to. I mean, they paid with what they had, and then the speculators, would totally trash the currency, so it dropped in value down, and that they were printing money for the purpose of trying to pay off this debt, and that didn't work. But you never have those hyperinflations just from a government trying to pay internally for things that the country needs. In fact, that has worked brilliantly well. Like in Argentina, in 2001, the Argentinians totally went bankrupt, and they said, come back later to their creditors. We don't have the money. And then they just printed their own money and started and stimulated their own economy, and it worked great. The economy got back on its feet. It was highly productive, and now they're doing really, really well. Other countries have done that as well. Well, Iceland is one just recently told the banks to go. Told IceSave they weren't going to pay, and they're just focusing on their own governments, and it's working very well, or their own economy, and it's working very well. I mean, there are many examples in history, like starting with the island state of Guernsey is a great little model. It's any place that's out of the way and nobody's ever heard of, they can get away with it. If it's a big country and they try to do it, they always get embroiled in a war because they must be stopped by the big international banking corporate
monoliths
power that now pretty much rules the world.
Speaking of which, great story at Bloomberg.com this week, Ellen. Too big to fail, too hard to fix amid calls to curb banks. Top U.S. bank regulators and lawmakers pushing to limit the chances of the government financing the rescue of some of the country's biggest financial institutions.
Right. Many people have said that regulation doesn't work. And here's another problem. They're not regulating the thing that actually collapsed the economy in 2008. It had nothing to do with the conventional banking system. It was in the shadow banking system, which is, it's another sort of, shadow by definition. It's a reflection of the real money. It's where they put up collateral and then they make loans against it. So it's loans upon loans upon loans. So it's this huge pyramid scheme of credit, which was based on, it turned out, bad collateral. And when that was figured out, that those mortgage-backed securities weren't AAA and that the derivatives supposedly protecting them weren't any good, then all the creditor or the money market collapsed. The people pulled their money out of the money market. It all collapsed. So that source of credit wasn't available for the banks, and therefore the banks couldn't work their borrowing scheme where they borrow cheap and then lend expensively to us. So these regulations that are worrying about the capital of the bank have nothing to do with what went wrong in 2008, and they just make lending even worse. They make the whole system worse. We have to redo the whole system, and what I would say the solution is public banks. In other words, publicly owned banks that do issue credit at interest, like banks do, but the interest goes back to the public. It goes back to the government, which can then use that money in place of taxes, or they can use it to stimulate growth in their own economy. I mean, there are many ways they can use it, but it's a sustainable system where the interest goes back to the source.
Ellen, how can I find out more about public banking?
I'm actually president of the Public Banking Institute, and our website is publicbankinginstitute.org. We have a conference coming up June 2nd to 4th in the Bay Area in California, and lots of literature on that website, lots of data.
We talked about the Bank of Canada earlier, Ellen. Most central banks, like the Federal Reserve, are privately owned, but the Bank of Canada actually is owned by the people of Canada. Now, the big question, of course, is who runs the Bank of Canada? The Committee for Monetary and Economic Reform says it's private banks, the BIS, the Financial Stability Forum, and the IMF. They want the government to borrow money from the central bank rather than from private banks, and they've gone to court to get something done about it.
Right. Well, that's the way the Bank of Canada Act was set up. And it was done for 35 years. The government borrowed largely from its own bank, and that's where. So they got interest-free money since they own the bank, and they get the interest back. They got interest-free money for many things: roadways and seaways, and your great healthcare system was great. It's falling off now because the government doesn't have the money anymore. Mm-hmm. But at that time, when they had all this interest-free money, they could just extend the credit to build whatever they needed to build, and then the thing would pay for itself, like, say, a roadway or seaway. You know, if you're charging fees, then the fees pay the money back. Or what it does, actually, is add to the whole infrastructure of the economy, and the economy pays for itself. In other words, businesses can make more money if they have roads and seaways, et cetera, and then they pay more taxes, and then all in all, it pays for itself.
Now, last we heard the motion before the Federal Court of Canada, heard a couple of months ago in Toronto, and you've talked to some of the Comer folks. What's happening here?
They actually brought a lawsuit against the government or against the Bank of Canada to use its tools that it was required or meant, or that it were set out in the Bank of Canada Act, to use it to serve the people locally rather than for the government to borrow from on the private market, which bears a heavy interest cost. Interest now composes, according to Margaret Kennedy, who's a German researcher, interest composes 35 to 40% of everything we buy.
Wow.
And about the same percentage of public projects. So if you cut out interest, you could get your public projects for half price. You could have, well, in France, it's been calculated that their entire federal debt today is what they paid in interest since 1974, when they went on to the system where they were no longer allowed to borrow from their own central bank. So if you eliminated interest, you could essentially eliminate the debt.
Ellen Brown is author of The Web of Debt, The Shocking Truth About Our Money System and How We Can Break Free. You can find out more at webofdebt.com. Hey, Ellen, always good to talk to you. Thanks for being with us.
Thanks, Phil. Great to talk to you.
After the break, Gerald Celente on This Week in Money.
Randy Elvis Frisky and his Las Vegas show band 40th Anniversary Aloha Tour. February 23rd in Penticton. February 24th in Vernon. On sale now. Details at randyelvisfrisky.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Gerald Celente is one of our most popular guests here on This Week in Money. In case you missed it earlier this year, we talked about a wide range of topics, starting with the U.S. debt ceiling. Gerald, market rally today reminds me of my whitewater rafting days. We're all cheering because we got through the rapids, and suddenly we realize, oh my God, there's a waterfall ahead, and that's coming up in March. That's the debt ceiling, which is going to dwarf the fiscal cliff.
Exactly. That's what I was saying. They really have done nothing. And what do we have? We have $16.4 trillion. The United States is carrying in debt, and that's, of course, without all the liabilities attached to it. So, no, they didn't do anything, and they're not going to, because they've avoided the biggest issues. And the biggest issues are the ones that I mentioned about taxes. I mean, you have hedge funds and in these so-called private equity groups and these vulture capitalists that are paying, 15% tax rate. And that's when you produce things. They're not producing anything. All they're doing is producing money for themselves. And so they're not creating anything other than personal wealth. That should be at about 39-40%. I mean, all they're doing is doing deals. And then there's the defense issue. We got countries to attack. We have drones to fly. We have bombs to drop. Yeah. Don't stop any of that. We have a $1 trillion F-35 plane program that's going to enrich the military-industrial complex. Don't touch that. So they're not doing anything to address the real issues.
Why not? I'm going to ask a dumb guy question here. Why aren't we talking about tax or entitlement reform here?
Why were the Bonanos, the Lanskys, the Dutch Schultz, and the Al Capones criminals? That's who they are. Yeah. Why is everybody afraid to call a spade a spade? You can call a criminal, a robber, a murderer a murderer, a whore, but you can't call politicians whores, murderers, and thieves? Or one of each, or all the above? That's who they are.
Gerald Celente, our guest here on This Week in Money. We're looking at some of the trends we can expect to see that we talked about last year that are going to continue to be reported and continue to be news in 2013. Starting with the U.S. economy, here is a great quote from the Trends Journal from fall. The American economy can't produce its own clothes and shoes or the manufactured products it consumes or its own energy, all of which it imports by issuing more debt. And that's got to continue this year, right?
Yes, and that's the only reason why there's any recovery anywhere. It's not only in the United States. They're printing this digital money not worth the paper it's not printed on. But they have names for it, white shoe boy names. In the United States, they call it quantitative easing. How's that for producing cheap money, bringing interest rates to record lows, starving savers because they have no place to put their money, but allowing banks to keep funneling it in. Let's go over to Europe. I got an idea. I got a scheme, Phil. We'll call it LTHRO, long-term refinancing operation. How does that fit?
I like that.
You like that?
Yeah.
All right, well, what that means is we'll give banks all the money they need, and don't worry about it, pays back when you get it. And in the meantime, I came up with another one. We'll call it, I got it, ongoing monetary transactions, OMTs. How's that? Well, everybody could use an OMT. Look what's going on in Japan. They just got a new prime minister, another El Presidente. And this guy, the first thing he did was he told the Bank of Japan, we need more cheap money like the rest of the world. We got to compete. Woof! You see the yen go down? Yeah, because they're printing more money. So our forecast for the economy of 2013 is more of the same but worse.
So more money printing, but of course that's not going to spur economic growth at all.
Of course it is. Don't you read fairy tales? Can't you buy into stupidity?
I guess I could. Yeah.
Well, maybe if you get paid enough, then you'll say anything.
We're talking to Gerald Celente here on This Week in Money, and one of the other big trends that we followed in 2012, the presidential reality show, it's over. Finally, U.S. voters picking the lesser of two evils. What is ahead for U.S. politics and President Obama?
I can tell you that now that Obama won, the future is easier to read because people don't have very high expectations. He really isn't all that popular. This wasn't a runaway race. And the difference is, you see, if Romney had won, then the sheeple would have said, Give him a break. Give him some time. He just got in there. Give him a good 2.5 years so he can really show how he's screwing up. Let's not take him at face value, having promised nothing. Let's see if he's going to deliver something. So in other words, Romney didn't come up with anything. The cat came up empty-handed. But if he had gotten elected, Phil, people would have, deluded themselves into believing that he had a plan and he was going to pull it off. So you don't have that anymore. There's no illusion now. There's no hope, and there's no change you can believe in.
We're talking to Gerald Celente about some of the trends we can look forward to or dread in 2013. One under the dread column, I guess, would have to be extreme weather. We had a real bad one last year. 80% of the nation's corn crop affected. The U.S. supplying nearly half the world's corn. We can pretty much expect that to be a no-brainer, that prices are going to go up around the world.
Well, people argue, is there global warming, is there climate change? I don't even get into the discussion anymore. All I merely say is, listen, if you're going to dump trillions of gallons of poison into the earth, spew trillions of pounds of toxin into the air, and dump trillions of tons of pollutants in the water, you think it's going to have an effect on anything?
No.
Well, you should run for office.
Of course it's going to have an effect.
Exactly. Yeah. And so, of course, it's going to have an effect. You're going to start seeing more and more extreme weather conditions. At the same time, we have massive population growth. Just to put this into context, you go back 100,000 years ago to 1900, it took all that time to put 1.5 billion people on the planet. Since that time, what have we added? About 6 billion people, 5.5 billion people in 100 years? So the planet can't sustain it. So now we have two things going on. Yes, there'll be higher prices for food, but there's going to be shortages also. Mm-hmm. And this is one of the trends we're writing about in the New Trends Journal. And the shortage is going to be for safe foods, for clean foods, non-genetically modified, non-herbicide, pesticide sprayed. There's going to be a real shortage of high-quality foods.
One of the things we saw again last year that we're going to probably see more of this year, worldwide protest against business, against politicians, against corporations. As you phrased it here, a few people with a lot in control of everything and a lot of people with very little going out of control. That's got to continue this year.
Well, it is. Again, I just mentioned about the austerity measures. I mean, could you imagine just last week in Portugal, they just added a 3.5% tax on anyone making over the minimum wage, plus other austerity measures in a country that's already in depression. Well, again, people talk about the New World Order. There is a New World Order. And it's not, it's in front of everybody's eyes. It's not a conspiracy theory. It's the banking order. As we're in Christmas time over here, just getting out of it, I can mention the word Jesus Christ, without people getting angry. And I mention it because, think about it, Phil, that the only time the Prince of Peace becomes violent is when he picks up a whip to chase the money changers out of the temple. Mm-hmm. Nothing has changed since biblical days. The money changers just changed their name. When I was a kid growing up in the Bronx, they were called loan sharks. Now, of course, they're financiers, and they're taking over. I mean, think about how it must have been for the Prince of Peace to become violent because the money changers were destroying the people. Guess what? They're doing it again.
One of the events we thought would happen in 2012 may happen in 2013. The first great war of the 21st century. Most likely Israel against Iran over nuclear weapons. Israel has nukes. Iran wants them. And the Israelis are on our side. They're the good guys, and the Iranians, of course, are the bad guys here, right?
Of course. And it's bigger than that as well. You look around, I mentioned what's going on in Europe with the indignados, millions of them taking to the streets throughout Europe in protest of the austerity measures. In the old days, that was called class warfare, and it's happening. As I mentioned, far too few have much too much, and way too many have much too little. And when people lose everything and have nothing left to lose, they lose it. You have class warfare raging. You have, going back into, look what's going on in Tunisia and in Egypt. That so-called pro-democracy movement of the Arab Spring has been totally taken over by the Muslim Brotherhood, and they were not involved in either of the uprisings that began in those countries over a year ago. And then you look at what's going on in Bahrain. There's a civil war. There's a civil war in Yemen. There's a civil war in Syria, and there's a civil war in Libya. There's a civil war in Mali and other places throughout Africa. This is spreading worldwide. And we believe that the first great war of the 21st century is already underway. And people just aren't adding it all up.
One of the politicians, Gerald, that I'm going to miss in the year 2013 is Congressman Ron Paul. He's retiring. He had some great stuff today to say. He says, stop the drone strikes, stop meddling in the internal affairs of other nations, stop accumulating more debt, respect personal liberty and free markets, and stop bailing out failed but politically connected companies and industries. Boy, there's a good prescription right there.
Oh, yeah. And think of the last one you just said. Stop bailing out politically connected companies. There are 4 words that killed capitalism in America. This is not capitalism. Too big to fail. Who made this up? Too big to fail. You mean your buddy's got connections and they're not going to let you go down for making bad bets, so let's steal the money from the people. And then Ron Paul is talking about freedom and liberty and constitutional rights. They're being taken away from us. Going into foreign nations, killing innocent people. And these politicians talk about the founding fathers. They'd be turning in their graves if they knew what they were doing. Now, this nation was built on a premise of not getting involved in foreign entanglements. And it's only the politicians and the money junkies that get us into these foreign entanglements because they have a money option in it that they want. Whether it was the banana republics for the United Fruit down in South America, or whether it was Iran, like you mentioned, in 1953, the American government overthrowing the democratically elected government of Mossadegh because he had the nerve to want to nationalize Iranian oil and take it out of the control of Anglo-Iranian Oil, better known as BP and Standard Oil.
Yeah.
So Ron Paul's 100% correct on these issues.
Gerald Celente, our guest here on This Week in Money. We have to reserve a special place in our 2013 predictions for the media, or as you call them, and I love this, the prostitutes.
Well, look what they're doing. Look what I mentioned Syria. The American government and the other NATO governments keep coming out with all of these accusations about Syria has chemical weapons and they may use them on their people, or they may get in the hands of Al-Qaeda and other bad people that the United States and NATO use when it's ever to their advantage. And without any proof of anything. And if you read closely and you watch the language, you find out that it's only speculation. But the prostitutes sell it as fact. And they, just like they did with the Iraq War and the Afghan War. And then now when you turn on the business media and you see these money honeys that they have, particularly coming out of Asia and other countries, I mean, hawking stocks and equities. I mean, I think they should have, maybe CNBC lap dancing for finance. And that's what it's turned into.
Yeah, absolutely.
These are prostitutes at the most base level.
Gerald Celente is publisher of the Trends Journal, and he's founder-director of the Trends Research Institute. Winter edition of Trends Journal coming out soon. Put your money where your mind is and subscribe. You can get more information at trendsresearch.com. Hey, Gerald, it's great to talk to you. Good to have you back, and we'll talk again soon.
Okay, thanks for having me on, and Happy New Year.
Thanks to our guests, Dan Denning, Ellen Brown, and Gerald Celente. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.